They're wiping us out, folks. And we've talked about this on previous videos. We've talked about this a number of different times. They're executing their plans, and we're seeing the rollout happen. Families are being wiped out as we speak, and it's sad. We talked about this a number of times on previous videos, and we're seeing some of the fallout of these predictions. Now, we're seeing rising gas prices, rising diesel prices. And what have we seen in the past is whenever diesel prices rise, everything rises. We're talking about inflation, recession, jobs being impacted, overhead expenses for all sorts of companies, dwindling profit margins for retailers, Walmart, Target, Costco, Sam's Club, you name it. And as these diesel prices continue to rise, we are going to see higher regular gas prices. We're going to see higher food prices in the grocery stores. And more families are going to be negatively impacted. We're seeing layoffs happen. We're seeing more and more layoff notifications come from large companies. We're not hearing it so much from small businesses, but these small businesses, they have a smaller individual impact, but collectively the impact of small business layoffs could be rather substantial, and that could easily be the unknown variable in this whole economic situation. Now, we're seeing banks get desperate. More and more banks are, let's just say, concerned about their current situation financially. And this is why you're seeing more and more reports of people saying that these banks are questioning me. How much money am I taking out of the bank? How much money am I withdrawing from the banks? And I think a lot of people they're getting concerned. Now, if you have money in the bank, if you have a mortgage, if you have a car payment, if you have credit card bills, if you have credit cards through a bank, then you're going to want to pay attention to this. And what I want to share with you guys is just more of what we thought might happen. And it's a little concerning. In fact, it's rather alarming because we were seeing this over in other countries. We're seeing the unrest in China, and many of the citizens over there, there's civil unrest, citizens unable to take money out of the bank. And many people said, well, that's over in China. We're here in the United States. I don't care about that. And I'm like, oh, okay. You don't care right now, but you will care when it happens to you. You will care if it happens to your family. And this all comes down to economic preparation. At the end of the day, it's economic preparation. And we're seeing more and more families, more and more Americans working 40 plus hours a week, meaning their families are depending on overtime to be able to just live paycheck to paycheck. They're not working overtime to get ahead. Many families are simply working overtime as long as it's available just to be able to keep the lights on and to be able to put food on the table and keep a roof over their head. And that's still paycheck to paycheck, not even getting ahead. Now, a lot of you guys have reached out to me asking about different ways of improving your financial situation and how to make money more than what you're currently making without spending more time doing it. And I certainly applaud you guys for taking action. Now, if you haven't done it, I'll leave my contact information in the description of the video down below. And there's a lot of different ways that you can do this. Several people that I've been working with are already making well over $500 to $1,000 per day. And to me, you want to counteract inflation, you want to counteract a recession, you got to make more money. It's plain and simple. But the scary component of this that we're talking about right now is that more and more banks are getting desperate. More and more banks are getting concerned. Fed Chair Jerome Powell recently raised interest rates yet again, 75 basis points. We knew this was going to happen, or at least I believe that it would happen. And I felt like the likelihood that, the Fed would raise interest rates another 75 basis points was quite high. In fact, I even thought that I thought that Fed Chair Jerome Powell might even raise interest rates another 100 basis points. But They stuck to the 75. And, here we are at the beginning of November. We've got the rest of November going into December in 2022. Fed could raise interest rates again. So we'll see what happens. Definitely going to see what happens. So keep my finger on the pulse. This is going to affect families further. It's making all sorts of expenses higher. And if you're in the market for a loan, if you have any type of variable related debt, credit cards are a great example of this. If you're carrying a balance on your Visa card, on your MasterCard, on your American Express credit card, you're going to be directly impacted by these continuous rate hikes. If you have a vehicle on its last leg and you need to replace that vehicle and you don't have the cash to buy a new car, chances are you're going to end up financing it, assuming you've got decent credit. Now, even if you've got bad credit, you can take a look at the link in the description down below. You could potentially get up to $10,000 even with bad credit. Some people find themselves on hard times and they have no other way to turn. And so I made sure to make sure that my community has access to cash if you need it. Obviously, be smart with the cash. I'm just going to leave it at that. So if you need up to $10,000, there's a link in the description of this video down below. But more importantly is what Wells Fargo is doing right now. And this is kind of what we're seeing with banks. So banks, they're having a tough time. The Fed is making it very, very difficult for families, but they're making it equally difficult for banks. Now, banks, they're seeing drastic reductions in mortgage applications, drastic reductions in terms of home equity loans, home equity lines of credit. And on the flip side to it, the banks are getting scared. The banks are saying, hey, we don't want to lend as much money. We don't want to lend as much capital out to the American people. They don't want to lend as much money out to people who need to apply for loans to pull equity out of their homes in order to have some emergency cash. Banks are getting scared. They're concerned about real estate values. And Wells Fargo, yet again, they're facing U.S. demand for record fines exceeding $1 billion. Now, this is rather concerning. I had previously owned Wells Fargo stocks, and I might actually still have some Wells Fargo stocks in one of my stock market portfolios, but this is a little bit concerning. So we've seen a growing number of banks leaving us concerned about the future of banks and the stability of the banking system. And here we are right now looking at Wells Fargo being under pressure with the Consumer Financial Protection Bureau to pay over $1 billion to settle a series of investigations into mistreatment of customers to deal with, that would ultimately have shattered the agency's previous record. Now, here's the thing. We've seen some shady things happening with Wells Fargo in the past, and you would think that they would change the practices and not find themselves in the same situation. But here we are. So the regulators demand in ultimately confidential talks they described by people with direct knowledge of the matter. It reflects its escalating frustrations with the bank, which has ultimately been punished multiple times by authorities over the last 6 years for a variety of past abuses. And basically in March, the CFPB director, he vowed to ratchet up the sanctions to, basically make it more painful for banks and repeat offenders, potentially even limiting their liability to engage in certain types of businesses. So banks could potentially be shut down over some of these new sanctions that are coming out based on the behaviors and repetitive nature of these violations. And the latest talks with the CFPB span automobile lending, consumer deposit accounts. We're talking checking accounts. We're talking savings accounts, potentially the CDs, your certificate of deposits, money market accounts, as well as mortgage lending. And Wells Fargo said in a filing earlier this week, without gauging the size of the potential payment, the bank set aside $2 billion in the third quarter. The third quarter, guys, right? So Wells Fargo set aside $2 billion in the third quarter to cover a wide variety of regulatory and legal issues, including making harmed customers whole. So when you say you're setting aside $2 billion to cover legal fees and to make harmed customers whole, it makes you wonder who exactly needs to be made whole. Like if you're a customer of Wells Fargo, and comment down below, maybe you are, maybe you're not, are you entitled to some form of checks in the mail from the likes of Wells Fargo? I mean, they're setting aside $2 billion for the purpose of fees and basically making people trying to make things right again, right? So I'm really looking forward to seeing more details on this and how many people will be qualified to receive checks in the mail from Wells Fargo. How many people, like what is the criteria to be falling in line with, being a customer that needs to be made whole? So definitely going to be interesting to find out what happens with that. But again, guys, we're seeing more and more banks finding themselves in situations like this. And with declining mortgage applications, declining used car demand, new car demand, most people aren't paying cash for cars. Period, point blank. Most people are not running out buying a Tesla and paying $80,000 cash for a Tesla. Most people are not buying houses with cash. Now, granted, there are a lot of cash deals. I'm not saying that there's not a lot of cash real estate deals. There's not a lot of investment deals buying real estate. Sometimes you need cash to close a deal quickly if you've got the cash, and then maybe you on the back end get a mortgage payment, refinance the purchase, pull your cash out, reinvest that cash that you used to purchase the home into higher yielding investments. Maybe, starting a small business, expanding your existing business. But whatever the case is, most people don't buy homes using cash. However, we're entering an environment right now with 7% mortgage rates that more and more people who have the ability to pay cash, they're doing it, or they're just not buying at all. But here's the thing. This is what's really kicking the bank in the pants, which is the fact that as interest rates continue to rise, fewer and fewer people are interested in borrowing money because they realize that most people, they make purchases based on what their monthly payment is going to be, period, point blank. So if their mortgage payment, if their car payment, if their whatever payment, whatever they're trying to finance is going up to a point where they're not comfortable, or the borrower can't qualify for the loan, well, guess what? The bank can't make the loan. The bank's not earning interest off the loan. And so the bank is losing money because of fewer customers. And so banks are getting desperate. I mean, we've already talked about very, very briefly what Bank of America is trying to do right now. They're trying to bring in new customers by essentially offering zero, no money down mortgages for certain, if I'm not mistaken, minority cities. And it's like, hey, we need customers. This is what the banks are saying. Banks are saying we need customers. Let's get them in somehow, some way. Now, is this going to put us in one of those subprime mortgage situations that we've seen back in 2008 during the Great Recession? Remains to be seen. But it's certainly setting itself up to be that way, or at least to look that way. Now, under Chief Executive Officer Charlie Scharf, Wells Fargo has been basically trying to resolve a slew of scandals that erupted back in 2016 with the revelation that the bank opened millions of bogus accounts. I know a lot of you guys remember that. And so basically the commission structure of the Wells Fargo banking institution was set up in such a way where you were financially rewarded by the number of accounts that you opened. And they apparently didn't have the oversight in place. Maybe it was, I don't know what management was doing that was allowing people to just simply create these fake accounts so that these workers could have some form of financial gain. But basically, a huge number of fake accounts, bogus accounts were opened up. And this was going on for quite some time before whistleblowers stepped in and shut that whole operation down. And I think that the bruises of that situation are, still affecting Wells Fargo today. And this is exactly why they're bringing this back up. So, basically, problems surfaced across multiple business lines, resulting in, basically 2 CEOs getting fired, getting booted out of the company basically, and a number of different costly penalties, including the Federal Reserve's decision to cap the bank's assets. So the question is, if the Federal Reserve steps in and starts capping banks' assets, right, and your money is in the bank where assets are being capped, what happens to your cash? What happens to your money in the savings account? What happens to your money in the checking account? These are questions you need to be asking yourself, and you need to ask yourself if you and your family are prepared. Are you prepared to deal with that? Are you prepared to fall back on your home equity line of credit, thinking that this is a great way to have an emergency fund, only to find out that the banks got scared, shrunk your home equity line of credit, and now all of a sudden the $50,000 that you thought you had, you don't have, right? And so this is one of the reasons why, one of the financial strategies that we executed a couple of years back was we said, hey, interest rates were low. Let's go ahead and pull this cash out, because what we had seen previously was I was in a situation where I had like 30 or somewhere between 30 and 50 different credit cards. I know it doesn't sound realistic, but I literally had somewhere between 30 and 50 credit cards. I had hundreds of thousands of dollars worth of lines of credit. And one by one, this was right around 2008, 2009, these banks got scared and they started shrinking, cutting, and closing my credit lines. And even some of the credit cards got cut, are completely closed by the banks. Banks got scared. And the banks were clearly scared because I was a prime borrower, 800 plus credit score, never late ever on any of my bills. And all of the credit utilizations on all of the credit cards were below 30%. So I was a premium customer, and yet they shut down credit lines, credit limits, credit cards on my behalf. So, and not everyone's got a high credit score. Not everyone's got a great credit rating. So what's going to happen to the families that are depending upon credit cards and different lines of credit as their emergency savings account, right? So what we did was, one of the things we did was we decided, hey, we'll just refinance the house, pull the cash out, and we stash the cash somewhere. And that way the credit line can't get cut. It's like, look, we already took the cash out. Put it in some smart places, put it in some safe places, put it in some places where the money can grow, where your return on investment was high enough to offset the cost of the borrowing. So, started some businesses, created some passive income, residual income. And that's the name of the game. That's the name of the game. And families who are not prepared, they're going to get swallowed up. They're going to get swallowed up, especially if you're an hourly worker and you're seeing your hours getting cut every single week. And, I've worked retail long enough to know, I don't work retail now, but I used to work retail, several of my earlier jobs. And one pattern we would always see is, okay, you would get the most hours leading up to the fourth quarter. Come January, hours get cut. And so families that are working hourly jobs, especially in the retail sector, are probably going to see drastic income reductions come January. So if it's not hours being cut, it's going to be more layoffs. And so, kind of a public service announcement. Hope you guys are prepared. Hope you guys are getting value out of the videos that I'm sharing with you. And, if you're in a tough financial situation, and even if you're not in a tough financial situation, your situation can always be improved. So, I'll definitely make myself available to you guys if I can help out in any way. Links in the description down below. You can contact me if you like. Let me know what you guys are thinking. Let me know if what we discussed in this video hit some chords with you. Does it resonate with you at all? Drop a like if you made it this far. Consider subscribing. I'll see you guys on the next video. Be safe.